Ladies and gentlemen, welcome back to the second part of Sustainable Stock Indices. Let us move immediately to the next slide for the table of contents of the remaining part. As you can see, the second part will start with a very interesting section on solely sustainable indices. You will learn in the next minutes what this means. Afterwards, we will discuss sustainable sub-indices versus solely sustainable indices. So we will make that comparison. And following that, we ask the question, how sustainable are sustainable indices? This will be followed by a short literature review, and a reference list will finish this chapter. We start that section with an overview on solely sustainable indices. Solely sustainable indices are indices not offered by the owner of big index families. Solely sustainable indices are generally constructed by sustainable foundations or by sustainable associations. In terms of assets under management, sustainable indices by index families dominate the market by far. Compared to a confusing high number of sustainable indices by those index families, the number of solely sustainable indices is quite low and manageable. Some examples for solely sustainable indices are the Naturaktionindex, the Global Challenges Index, the UN Global Compact 100, and the ECPI Index. In the following slides, we give a short description of these indices. The Naturaktionindex is a German price index offered by the company Securvita and constructed by the company Solactive. It includes 30 international companies with ecological and sustainability practices. This index has been developed in Germany, but the index basket is filled with international companies. The constructor negates negative screening as a selection criteria and includes companies that fulfill the following criteria. Companies have to offer products or services that help to address key human problems. Companies should represent an innovative product design. For instance, recyclability could be such an innovative character. The company is a pioneer in terms of production, sales, and transportation process. They expect that the company minimizes raw material consumption. As a last point, the company is a pioneer in terms of social aspects, like occupational safety or gender and diversity. On the next two slides, you may find more explanations about the Naturaktionindex. Please read it on your own to fully understand the concept of the constructor. So here you see an overview on the top components of that index for April 22. And here you receive some more information on the composition of the index. Well, the next solely index is the Global Challenges Index. This is an index offered by Börsen AG, the holding company of the exchanges in Hamburg and Hanover. The index is a price index and selects companies with forward-looking contribution to global challenges. The 50 internationally selected companies address 7 global challenges. And these are combating causes of climate change, secure adequate supply of drinking water, stop deforestation, ensuring biodiversity, dealing with demographic development, combating poverty, and support of responsible governance structures. The index is balanced twice per year. The companies that are active in controversial areas like tobacco are excluded. Besides of large companies, the index also includes small and medium-sized companies. As selection criteria or investment strategy, after addressing the 7 global challenges, a combination of negative, positive, and best-in-class screening is applied. We move to the next slide, which is on the UN Global Compact. This is an initiative with more than 10,000 members worldwide committed to implement universal sustainability principles. The index is composed of 100 selected companies based on the best implementation of the 10 principles. These are: in human rights, the business should support and protect the internationally proclaimed human rights. In labor, freedom of association, no forced or compulsory labor, abolition of child labor, no discrimination. For environment, support of a precautionary approach to environmental challenges, initiatives to promote environmental responsibility. The company encourages the development of environmentally friendly technologies. And regarding anti-corruption, the company should work against corruption in all forms. The next index is the ECPI sustainability, or are the ECPI sustainability indices. There are several. Located in Italy and a leading provider of sustainability research. The screening is based on 100 ESG indicators and covers data for more than 4,000 users. The company also assesses countries' compliance with international treaties, conventions, and best practices. ECPI offers several sustainable indices like ECPI Global ESG Infrastructure, ECPI Circular Economy Leaders, and the ECPI Children's Right Index. We now leave this section in solely sustainable indices and go back to the table of contents. Our next section is titled Sustainable Sub-Indices versus Solely Sustainable Indices. And on the next slide, we start with this comparison. We now come to the comparison between sustainable sub-indices and solely sustainable indices. Solely sustainable indices filter companies explicitly and are not built on dependent on the parent index. Solely sustainable indices are in most cases more impact oriented and follow a more innovative screening approach. Solely sustainable indices may have less conflicts of interest regarding the company basket, since world market index providers invest a lot of research in their non-sustainable company baskets. They may be interested in including their conventional index constituents in their sustainable sub-indices too. Sustainable sub-indices of the big index families are tailored products based on their parent indices. Solely sustainable indices are only built to promote sustainability, and they do not depend on any parent index. To summarize, solely sustainable indices are probably in many cases the more sustainable indices, but they have no market power on international financial markets, and therefore the majority of investors deal with sustainable sub-indices offered by the big internationally active index families. And that brings us immediately to the next section in our table of contents, which seems very puzzling. How sustainable are sustainable indices? That's an interesting question. For an answer, we move to the next slide. What do you think about the question? How sustainable are sustainable indices? Here we have to refer to what has been taught in the last lectures. One point was the characteristics of the 17 Sustainable Development Goals, the SDGs. Besides that, the 7 Sustainable Investment Strategies, which at the moment heavily rely on investing into stock exchange traded companies. But in many cases, impact cannot be created by investing in stock exchange traded companies. Generating impact needs the identification of a specific project. Then the project needs to be structured as an independent legal entity, and then, not earlier, finally, financial instruments can be used. This is an effort causing the costly project development and a costly project development process. The number and the amount of invested assets in impact investing is relatively low. As we know, indices rely on exchange-traded companies. Thus, sustainable ETFs based on positive or negative screening, on ESG integration, norms-based investing, are possible, of course, and they allow the creation of a huge amount of sustainable assets under management. The disadvantage is that the level of sustainability reached is quite low. Indices which deliver a higher level of sustainability can be identified with the help of sustainable strategies. Let us look at impact investing, themed investing, and in part by engagement and shareholders' activism. Additionally, strategies based on the reduction of greenhouse gas, targeting the existing 2 climate benchmarks, the European Union Climate Transition Benchmark, EU CTB, and the EU Paris Aligned Benchmark, EU PAB. To summarize, it can be noticed that sustainable indices show a very diverse level of sustainability. Indices based on screening and ESG integration show on average a quite low level of sustainability. Others like impact investing, themed investing, greenhouse gas related strategies, or activism and shareholders engagement, they could generate higher levels of sustainability. Strategies leading to higher levels of sustainability often face the problem of non-availability of companies eligible for this strategy. That's a big problem. Thus, the number of indices based on the lower level of sustainable investment strategies is extremely high, whereas indices offering higher level sustainable investments are very rare. We will discuss this situation more in detail in the next presentation when we deal with sustainable exchange traded funds. According to the table of contents, we now approach the literature review. So we move to the next slide, and here you see that in the literature review we will now discuss two publications. The first is a paper by Arribas, Espinosvano, Garcia, Morales, Banuelos from 2019, titled with the inclusion of socially irresponsible companies in sustainable stock indices. And the second paper is by Jacob and Wilkins from 2021, titled What Drives Sustainability Indices? A Framework for Analyzing the Sustainable Index Landscape. Now, here the literature reviews are structured according to the points research question, methodology, and finally the findings. We start with a paper by Arribas et al. From 2019. To the research question. The authors ask if companies referred to as ethical, sustainable, or socially responsible by ESG rating agencies do really justify this label. Companies having been included in the Dow Jones Sustainable Index World, although having been involved in controversies, have been analyzed. To the methodology. The authors analyze the DJ Sustainable Index World and the process of selecting companies. The acceptance is based on the best-in-class screening methodology. They then check the controversies in the Thomson Reuters ICON database. Finally, they found out that the number of companies with controversies being a member in the Dow Jones Sustainability Index was substantially reduced over years. And to the findings of that paper, results confirm inclusions of irresponsible companies in the Dow Jones Sustainable Index World. This is in line with previous studies criticizing the methodologies applied by social rating agencies and those which assume the similarity of sustainable and conventional portfolios. The authors interpret these results as an explanation for contradictory outcomes regarding the performance of sustainable and conventional mutual funds. Well, we now approach the paper of Jacob and Wilkins from 2021. To the research question. This is an analysis of the heterogeneous sustainable index landscape. The authors want to develop means and methods to move the measurement and impact of sustainability performance in the center of attention and focus the often neglected aim of sustainable indices, which is to incorporate sustainability into investment tools. To the methodology. 4 steps are used. First, comparisons of return and risk indicators. Second, analysis of sustainability profile of sustainable indices while actively managing the presence of ESG rating disagreement. Third, to determine index-specific risk and return sources. The authors integrate sustainability factors in factor analysis and risk decomposition approaches. Fourth, to increase the transparency on the composition strategies of sustainable indices, a performance attribution analysis based on sustainability classes is done. We come to the findings of this paper. Their framework facilitates the analysis of sustainable investment tools and thus also supports investors in making more meaningful and forward-looking investment decisions in line with their sustainability-related preferences. Well, we close this section with a view now on the reference list. Here you see we have some papers which are quite interesting. For me personally, the paper by Buschbauer-Orlitzky is a very interesting one and is recommended for reading. So, ladies and gentlemen, thank you very much for your patience and for your effort. We finished the presentation Sustainable Stock Indices. Please switch to the remaining presentation, which is titled Sustainable Exchange Traded Funds. Both have to be worked through together. So we started with the sustainable indices, and then please approach also the chapter or the presentation on sustainable exchange traded funds. Thank you very much for your attention, and perhaps you will come back to the next presentation. Bye.